Good morning, everybody. Stephen Williams, founder and president of the creditrepairshop.com. It has been a very busy week. Um, Had some very nice meetings here in my area. Uh, there's an election for mayor of our city of Milwaukee, and I've been trying to schedule meetings with the candidates. But I did sit down with one. I've actually sat down with him probably about 5 times, and I ended up endorsing him for mayor. Talked about everything that I felt that it was important for him to care about in the part of the city that my business is in, and the people that I serve in the city that where my business is at. Well, moving on, let's talk about the debt. I'm seeing some things starting to play itself out because they know that people are going to start getting income tax money, and they are unloading tons. I'm talking about hundreds of millions of dollars is being sold to debt collectors. You have on one hand, you have the original creditors. They're basically writing off the whole debt. Now it's on your credit reports. It'll say write off, charge off. Those are technical terms that they're going to turn over to the IRS and to their accounting. It's an accounting term that they have to have in there to take it off as an asset for the company. Now, when they do a full write-off of the debt, which is what is about to happen on December 31st, that means that they will not be responsible for that. They've written that 100% off, and they will not collect any money on that debt because they've sold it to debt collectors. So they're gonna unload hundreds of millions of dollars, really billions of dollars worth of bad debt. Where they're going to write it off fully so they could get the benefit on their taxes, because that loss in income, that loss in revenue of money that they put out there or services that they put out there, and they didn't get money back for it, that's going to be 100% write off on for businesses. So a lot of companies are going to be doing that. On the flip side, the debt collection companies are getting very aggressive, and they're like just scrambling around to buy as much debt as possible because they know that everyone or most people are going to start getting taxes back, and so they want to try to trap these people. And one of the things that I saw that was that really got my attention on here was the education debt. Reason why that's important is because education debt, when you get a judgment and you can actually attach that to get collected through someone's taxes. Unlike some of the other debts that's out there, like a old credit card or some cell phone bill, cable bill, those types of debt, medical debt, those types of things, they cannot attach that to your income tax refund. So what I'm seeing here, there's one here from a truck driving school. They are going to, whoever buys this debt, they're going to attach it, and they're going to have where if you end up getting a tax refund, they can attach the portion that you owe and take that portion out of your tax refund that you were going to be getting. That can happen for any educational type loans that you have. That can happen for taxes that you have, certain liens that you have, but they're mostly going to be stuff to do with taxes, either payroll taxes if you're a business owner, or taxes that you owed, some type of taxes that you owed and you work for someone, and there's some type of additional tax that could be considered where they can make a claim to the IRS and they can actually attach your refund and take your money that you thought you were going to get. You won't even know it until you get the refund. And you could see that a couple of years ago, I do a lot of advertisements for tax refund companies, and one of the things that they had made them start doing, because what was happening is a lot of people were coming in, they were getting the refunds, and then all of a sudden the company that did the refund loans, they saw that that individual wasn't going to get the amount that they thought that they were going to get. And so they put in a system where they can actually check to see if there's going to be any attachments onto your refund, and then they would tell you, notify you right away. So that's one way that you can find out if you have any attachments to your refund that's going to happen for the 2019 refund that you're expecting to get. So they have a system in place. The IRS connects it with all of the tax refund companies, and when they type it in to try to do a loan, they'll know if you have something attached, and they'll tell you how much that is. The next thing that I see that's coming out, which these are very difficult to collect, especially now that there's so many banks out there. It's the bank overdraft ones. There's $900,000 that's on the market to be sold. In the past, it was the banks used to kind of stick with each other, and they would say if you had someone that was on the check system, we won't allow them to come to our bank. But I don't see that really stopping people from getting accounts now. It's like it's all hands on deck for trying to get as many depositors at a bank, because a lot of people are doing direct deposits, so they're going to get first access to any money if you do have an overdraft to the account, unless you remember to close it out. But the risk has really went down for them. But they are going to be selling this to debt collectors, and the flip side of this is that bank overdrafts are very easy for debt collectors to collect if they take you to court, because it's going to be hard when you had a signature on a check that you wrote. The validation process on that is going to be very short. There's not a lot of things that you're going to be able to challenge on that. But what you can do, because the debt is being sold at a discount, is that you can negotiate to have it settled at a discount and have your name taken off of the check systems. Some more here. Payday loans like crazy are going bad. People are getting these loans and not paying them back, or not paying all of it back. The reasons why they continue to do these payday loans is because they charge such a high amount of interest that you can have, for every loan that pays, you can have like 5 to 10 loans go bad. I really did honestly saw the contract for a local payday loan store for one of our clients here, and the annual percentage rate over the year was over 2,000%. Can you believe that? 2,000%. Sorry about that. I had a brief interruption, but the payday lending ones are just going crazy. And I'll just repeat what I was saying earlier. One of my clients, over 2,000% interest on it. And so that means that for any amount of loans that go bad, if they have one person that pays all of it, it can make up for the other ones. And if you are in business, or you know business, that's exactly what every business does. They try to figure out ways to make a certain amount of profit on their products or services, and then the profit on your products and services also takes into account for any bad debt that you might have. And the way that credit card companies do it, the way that payday loan companies do it, is that they charge so high with the interest that it carries over to be able to help with the expenses of any bad debt that happens, and make a profit and pay their bills. Some more here is mixed retail. And same situation with these mixed retail cards. $1.1 million just from last month. And that no matter what, you go to any store, they're going to try to get you to get one of their credit cards. And the reason why they do it is because if you make a purchase of a shirt from their place, and you get it on a credit card and the shirt was $50, if you just pay the minimum payments, you can end up paying $150 for that shirt when you look at the interest, or $75, or you're paying double. And again, that's the business model. Get as many people stretched out paying small payments, and you're going to maximize what you've sold on that one time. You maximize the return of investment on that one item that you've either sold or that one service that you've provided. That's just the way that they're doing it with business. Here's a major credit card, $1.3 million, and the charge-off date on the mixed retail was 2013, which is past statute of limitations in all states. It was for 2013, so it was past statute of limitations in April of this year. So all of this is past statute of limitations. And the mixed retail, 1.3 million, charge-off date 2010 and 2011, past statute of limitations. And we have another one here with payday loans, $814,000. So their strategy, what they're going to do, all of the major companies that had the debt, they're selling it so they can get the tax write-off on their taxes. Collection agencies are going to buy it pennies on the dollar, and they're putting their gambler. They're at the gambling table, saying that we're going to get most of this money because income tax is about to come out, and people are going to want to just go ahead and get, they're going to get them in court and get them to have to pay that money. With the educational loans that were put out there, they're going to attach that to the taxes. So they will usually get 100% of that, or they're going to attach and get a portion this year and next year and until it's paid off. So if you need help with anything, please reach out to us. And one quick thing with these educational ones, if you get educational collections, you need to go to my website, just search on the blog for the link for educational debt or the fraudulent school list, because if it's on that list, even these truck driving schools can be fraudulent schools for what they promised you. The debt can be voided out if they're on that list. But there's paperwork that you have to fill out to do that. So if you need help, reach out to us, post your comments below. Visit my website, thecreditrepairshop.com. If you don't have your reports, credit reports and scores from all three, click the link below. Go to my website, the3scores.com. Everything starts right there, knowing everything that's on your report, how it's listed on your report, who placed it on your report. The free places that provide reports, they don't give it to you the right way. Please subscribe to my channel, post your comments. I really appreciate it. I respond to every comment unless I accidentally miss it, regardless of what it is. And tell your friends and family about it. Subscribe to my channel. And I'm going to leave you here with positive thinking with all of this stuff. You have to envision yourself, seeing yourself with anything that's resolved. And for this channel, we talk about debt and credit and stuff like that. You have to envision yourself with seeing yourself resolving everything. Remember my exercise that I give you. You on a piece of paper, you put a little like a T on the left side. You put everything that you're facing, all of the collections, the debt, all of that stuff. On the right side, you put how you will feel when it's resolved. How you will feel when it's resolved. And then you put down underneath there the options to resolve everything. Don't worry about if that option will work. All you have to do, your job is to look at the options and start matching up the potential options with what you're facing on that left column. If you do that, I promise you that things will work out in your favor. You do not have to know exactly how it's going to work out. Allow it to work the process, allow the processes to work, learn as you go through the processes, and you will see that things will work out in your favor. So I would like to thank you for your time. This is Stephen Williams, founder and president of the Credit Repair